guys, welcome to a Trading Parrot. I see that we are printing an indecision candle on the daily, and that pretty much reflects the current sentiment in the market. You have lots of people on crypto Twitter shouting that this is the bottom and all that is happening at this price range is just a deviation and price is just about to shoot to new highs. But on the other hand, we still have, if it's not 1 billion, at the very least 2 billion from Germany that could still get dumped on the streets. Not to mention as well that we have empty GOX in progress and the miners' capitulation. To be honest, I wouldn't be surprised at this point in time whether the events that are coming in the economic calendar might be all that's needed to do a U-turn and start shooting back up. If it was the case that we were to put new lows, in this video we're gonna focus on what are the most likely areas that the price can do a major bounce. Guys, if this is the type of content that you like to watch, make sure that you're subscribed to the channel and hit that notification bell. And if you feel like supporting the channel, watch the video until the very end and do not go anywhere without leaving a comment down below. And guys, I remind you, I have a link down below, new partnership with Bybit, allow us to offer up to 30,000 in rewards. And if you head down to my Discord server, you can connect your Bybit account and claim up to 70% discounts in all TTP subscriptions, which will offer you access to all the different indicators and perks of our community. Of course, this morning the market was a lot more green than what we are seeing now. We can see that Bitcoin went as high as 58K and it's still battling with the lowest close from the 1st of May, not being able to reconquer those levels, but at the same time bringing some higher lows, which is getting people confused because it seems to be like we are about to shoot back up. It's just that that hasn't happened yet. So, as I promised in this video, we're gonna try to answer the question, if the price was to continue coming back down, where is the next area more likely that could reverse the price to the upside? And for that, we can look at multiple sources of information. The volume profile here telling us that from 52 to 51, that is a cluster of volume that typically helps to support the price. And we haven't yet touched that area. We came very close a couple of days ago. And right after that cluster, you have the cluster of 43K, but that's pretty far from the price. And we will need quite a lot of additional selling pressure because even though Germany continues to sell and we could speculate that they have sold half, we have made a move already of 13% down since they started selling. So maybe if they sell another half, we could get to all this area around here. But at the same time, no one really knows for sure how much left they have to sell. Everybody's trying to speculate. So let's ignore that and let's not try to count on data that might be manipulated. And let's look at the charts, which is what we do in this channel anyways. What we have here is a massive megaphone pattern. And you can see that twice in a row we have been touching this as support. We can also see that we have lost this trend line and we have come back to retest it. We came very close to retest it. We have lost the 200 daily moving average. We are below it. We could say that this was the retest and now we are getting rejected for another leg down. So I do not need to convince you that we need to be looking for a potential better area of reversal. They have a case because, for example, on the daily we have a breakout. We went to 64K and then we came back below and we started building this bullish divergence on the daily. And even today, seeing that the price is looking pretty bearish, we are still holding this new trend line that we are forming locally here. So I understand the argument as well that we could start pumping from here. And by the way, those bullish divergences are now reduced from 5 to only 1 left. Next, I'm gonna look into data coming from Trading Different. You have never seen me using data from this website. We just agreed a new partnership with these guys. They're based in Argentina and they seem to be the first ones that introduce charts that calculate where are the liquidation areas located. Very similar to what High Block Capital does together with many other websites. And I have it set up to show 3x, 5x, 10x, 25x. I'm interested in liquidations of all of these people, and I can see that after we came to take the 56k liquidity, we still have liquidations piled up from 50.5 all the way to 49k. And then there's another chunk from 47.3 to 46.5. Right after that, the levels of liquidations slow down quite a lot, and the next significant level is way far, is only at 30k. To the upside, we have liquidations from 73 to 74. Those are the most substantial ones. Of course, the price will want to take the red, is going to act like a strong magnet. So I think that if we lose this 53.5, which was the low that we printed a couple of days ago, on the 5th of July, it's very likely that we are going to end up consuming all this range of $500. And if that doesn't hold, we have very close to it this area down here as well. I find this tool magnificent. You can change the time frame, you can scroll, you can overlap with different indicators from TradingView, and they also have their own custom indicators integrated. It all runs within their own websites, so you do not need a separate TradingView account to use with this. And it comes back with some template configurations, some of them dedicated for scalping and swing, that changes the time frame from 4-hour to a lower time frame and enables and disables the different levels of liquidation levels accordingly, specific to your own personal style of trading. Pretty cool tool. If you want to get an exclusive 15% discount on this tool, have a look at the links in the description. I also have discounts for all the other advanced tools that I usually feature in my channel. Looking at the fair value gaps, we're going to find quite a lot of confluence here. We also have the 51k level. In this case, it spans up until 53, and we have the 47k here as well. On the 30k, we also have loads of fair value gaps, giving confluence to those liquidation levels. If you're going to look into liquidation levels and you're going to use a tool like this one from CoinGlass that restricts the liquidations to a specific time window, like for example, I use typically the 30-day, be careful because this doesn't show liquidation levels prior to those 30 days, of course. And there are liquidation levels from before that you are ignoring. And I see a lot of people on crypto Twitter constantly referring just to this chart, saying how many billions of liquidations there are to the upside and never even looking at what's going on before those 30 days on the left-hand side of the chart. We can also use the live order book from Trading Light to speculate what could help holding the price. And I think around 52 to 51, we have a chunk of cushion there, not very large, but quite spread out liquidity. Right after that, we have a big vacuum from around 45k to 43. And very interestingly, we see 42 to 39. For the first time, those 30s are starting to appear. You can see here that for a lapse of time, we have 34k. So it's pretty clear to me that the season of fishing has just started. Now, very careful because the longs have started now to push higher. At the moment, they're being punished. And depending how low this goes in here, it could start a cascade to the downside if they don't manage to hold the price above these lows. If we focus on high block capital, on the left I have the 1 month, followed by 6 months, and followed by 1 year. The most critical level is the 51 that hasn't been consumed. Then you have a big vacuum and almost nothing before that. On the 6 months, we have the area that we just took with some leftovers sliding slightly below 50k. Interestingly, the highest level of liquidation is at 67. If we go back to trading different and we zoom in this new area here, you're gonna see that the 67 is also present in this chart. So there is confluence with what high block capital is showing us in the 1 month time frame. And guys, I think if we were to visit those levels starting from 51, 50, 48, 47, which I show you in this video, I'm pretty sure that the dominance will make a push higher here and potentially even regain this white trend line. So be careful with the altcoins that you're trading. Earlier today, I published a video on ADA, XRP, and Ethereum on the weekly time frame, just because at the moment we are depending from a thread, there's quite a high risk. Of course, that comes with high reward as long as you're on the right side of the trade. So I think summarizing, there's quite a lot of caution here right above this level of liquidation at 51.52, but at the same time, I think if that caution really doesn't hold, as we saw, the levels were protecting the price with only 300 and 400 of liquidity, so the price might pinch that liquidity and actually go beyond and take these liquidation levels from here to potentially even get to 49 for a moment. All of this subject to the assumption that we made earlier, that if we broke the lows, how low can we go? And remember, we might not break those lows. I hope that makes sense. Guys, thanks so much for watching this video. I hope you appreciate the second update of the day. If you do, hit the like and leave a comment down below. I'm interested to know which levels are you planning to buy if we see lower levels on Bitcoin, or if you already have packed your bags for a potential continuation in the bull market. Thanks so much. See you later. Bye bye.